What's up, everybody? Brant Phillips with Real Estate Fundamentals, and what I want to talk to you about today is how to quickly analyze a mobile home park deal. I know that mobile home parks are quickly, all of a sudden, become like the hottest asset in real estate investing. Now everybody wants to get their hands on a mobile home park. I get it, like it's that idea of that cash flow, right? But there's obviously some things that you have to be very cautious of. There's a lot of pitfalls. And for those of you who are primarily, single family real estate investors, and you've never analyzed a commercial deal, never done any commercial investing, I gotta warn you, it's a totally different animal when it comes to analyzing these mobile home parks. And that's my background, right? Like I had done hundreds of single family deals before I did my first commercial deal. I did a commercial deal a few years ago, but it wasn't really as in depth, or the learning curve wasn't as steep as it has become since I began acquiring these mobile home parks. So I want to give you just a few little basics about things to look for and how you can kind of quickly analyze a mobile home park deal, kind of phase one, if you will, phase one analysis on if it's something that you want to pursue, if it's worth pursuing further, if it's a good use of your time, or it looks like a great opportunity versus an okay opportunity versus an incredible opportunity. And that's part of the reasons that I love mobile home parks so much, that we've just found some incredible deals since I began investing in mobile home parks. So number one, the first thing I want you to look at when you're buying or analyzing a mobile home park is income. Obviously, how much income is this park generating, right? So you're gonna have to get some financials. You may request bank records. However you have to do it, you have to get some data of what the income is today, not what it could be, right? We're not looking at pro forma and what projections are. We're like, what is it today? Because that's really gonna be the critical piece of information on what you're gonna use to analyze your deal, of what income is it bringing in today. You're gonna also wanna get some historical data as well, the last 3 months, 6 months, 12 months, 2 years of income that is coming in to their bank account or into their hip pocket national bank, because you got to understand, a lot of these mobile home park sellers are mom and pops that may be taking a lot of cash. You got to make a decision if you're going to accept that data, if you believe it or not. But one way or another, you got to figure out what the income is. Number two, what are their expenses? Okay, so typically with mobile home parks, you're going to be looking for an expense ratio in the 30 to 40 something percent range. So if you are being sent data and information and their expenses are like 15% or 20%, one, they're not keeping good records. Number two, they're lying. Or number three, which could be the case, is they are performing a lot of the maintenance, repairs, whatever, management, all these things that you're most likely as a passive investor going to pay money for, they're doing themselves. So I'm just telling you, the industry standards in the 30 to 40% range, you're probably not going to reinvent this wheel and drastically reduce expenses. We've found some ways, put some little things with technology and outsourcing. We've been able to get our expenses pretty low with most of our parks, but these two items are critical, right? So you got to make sure you know the income and the expenses, and essentially what you're going to do at that point in time is build a little cap rate, figure out what your cap rate is. Easy to find, like cap rate formula. There's so many little online places that you can go plug in, figure out what your cap rate is. I will tell you that, ideally you're going to be wanting to buy better than 10, right? So we've been buying really a 12 to 15% cap rate, okay? That's what we've been buying at, okay? So like right away, day one. Some people are like, no, you can't do that. Those deals aren't out there, BS. We've been doing it. That's what we're looking for. That's really what our target is for small to medium-sized mobile home parks. You can buy it whatever you want to buy it, but that's really kind of what we're looking for. So do your own due diligence, but income and expenses, you got to get some good data there, or you don't even move on to the next thing. The next thing you want to know about are the utilities, okay? So my wife overheard a phone call me the other day. I was talking to somebody And she's like, every time I hear you talk about mobile home parks, you're always talking about the utilities. She's like, you're talking about the water, you're talking about sewer lines, you're talking about electricity. She's like, it seems like that's all you talk about. And I'm like, you're right, because utilities are critical. You gotta check that box, and you gotta understand, is it well water? Is it city water? Are you gonna buy if it's on well water? Are you gonna buy if it's on, only you're gonna buy if it's city water? These are questions and information that you've got to do your research on. Are the sewer lines, is it a septic sewer? Is it city sewer? Is it a lagoon? What is that septic makeup? Is it a spray field? Are they, underground septics? Like, what you got to figure out that data and that information, not only what it is, what is the condition of it, when were they last serviced, when were they last repaired, when were they installed. There's a lot of information you need to dig down there, but what you're going to really have to decide is, what are your requirements? What are you looking for when it comes to utilities? What if they're all bills paid versus individually metered? What are your requirements as you begin to do your due diligence? Okay, so these are the three that are absolutely the most critical. Number 4, you're going to look at the area. Okay, so what do I mean by this? The area. So geographically speaking, is this in an area that you want to invest in? Are you looking for a deal that's in close proximity and this one's out of state? That's obviously would fall off your radar. But if it is an area outside of, say, where you live or where you invest in, ideally, but you have an opportunity that comes to you, how do you research that area? Is it a deal that you want to consider? I'll tell you that when I first began looking at mobile home parks, I specifically wanted to stay in Texas, ideally where I live, which is in the greater Houston area, or central to East Texas, because I've got contacts and it's not too far of a drive, and I've got people and connections and things like that to help out. But I'll tell you that since that time, we have just discovered some amazing deals. So we've since bought outside of our state. Okay, we've gone outside of our state. So what have we done? I love this website, bestplaces.net. Check out bestplaces.net. I want to look at the economy. Is it growing? Is it declining? I want to know the size of the metro. Ideally, I'd like to be investing in a city with a metro of over 100,000 population. I want to see some job growth. I want to know how far I am from a Walmart. That's something else that I look at. You start pulling in information and data. I like to look at things. I want to know what the median home price value is, because if the median home price of a home in that market is less than $100,000, for example, let's look at that. If they can get a home for $100,000 to live in a mobile home park, where if I'm owner financing them a home and they're paying lot rent, they could be paying $700-800 a month. The pricing's not that far off, on their price per month. And a home is a better product. But if I see a median price home value of $150,000, $200,000, $250,000, and I can give them a very nice mobile home, for $700-800 a month, then I am going to win that battle for someone who's on a limited budget, right? So that's what I'm, some of the items that I'm looking for. And a place that I use is bestplaces.net, along with a few other various websites, making phone calls, talking to people and things like that. I've pulled records from city planners and talked to mayors and like I said, city planners and other people and other business owners and even other mobile home park owners in the area. And I've actually had some real good, luck and talking to people who are just like very familiar with the area and what's going on in the area. Oh, also with mobile home park brokers, commercial brokers who are familiar with those areas can give some insights as well into things like that. All right, so future growth. Let's just talk about growth. Okay, this is something else I want to know about. So we talked about area, let's talk about growth, right? And this really comes like, what is the upside? Okay, so are rents low? Is there opportunity to raise rents? Are there ways to reduce expenses, meaning, individually metering electricity versus a current park that's all bills paid? All bills paid water, where you can sub-meter water. Like, what are ways that you can decrease expenses and increase income? The primary way that we can increase income is, number one, raising lot rents. We don't do it immediately. And that, as a matter of fact, we've never done an immediate lot rent increase, but over time we absolutely want to get our market rents up, or get our rents up to meet market rents, and most oftentimes when you're working with mom and pops, their rents are way low. So that's the first thing you want to look at for future growth is rents. Okay, so then a second thing is expenses, right? So we want to reduce expenses, obviously. Okay, then number 3 is fill lots. They've got lots that are either there's vacant or abandoned homes that you can remodel and owner finance or give away just to get your lot rent, or go actually buy newer used homes or bring them in. This is our least favorable way to generate an increased income. This increasing rents, the little arrow there, is the most ideal way. Okay, and then also you definitely want to look at reducing expenses. Okay, you can also create lots. I see a lot of deals that come across and they're saying, hey, there's these 5 acres, you can expand and create lots. That's not really what we want to do. Doesn't really make financial sense most times in the time, work, effort, headache, risk that you're doing with all that kind of stuff. We want established lots. Okay, that's what we're really looking at. All right, I'm running out of whiteboard here, but no worries. We're going to talk about really the money, really in depth is the money side. Okay, let's talk about financing, if I could spell here. All right, so financing, what does that look like for you? Okay, what does that look like for you? Is the seller, are you financeable? Do you have the cash, you have the money to put down? Do you have the ability to raise money? Well, you all have the ability to raise money whether you know it or not. But, what's your situation? Is the seller offering financing? You got to look and make sure that if you go under contract on this deal, that's going to be something that you're going to be able to take down. Okay. Last thing, I would just say, personal. Now, this is something only you can answer. Is it worth the return on your investment? A lot of times I find, is it worth the return on your time? Like literally, we bought one deal because after we got into it, we really analyzed it and was like, you know what, it's just not good use for our time. The park is too small, and they pretty much almost gave it to us. So we were like, okay, I guess we'll do this. So you just have to start looking at, how much time is this going to take? What's the capital investment? What's the return going to be whenever you stabilize that park or whenever you sell it? And you just start looking into those personal factors. Is this something you want to deal with? There's a whole nother side of things when it comes to managing mobile home parks. It is a new learning curve you're going to have to dive into. But so this is just a kind of quick thing that we go through to begin analyzing a mobile home park deal. We are also creating, I will let you know that we're also creating some additional training that goes more in depth on how to analyze a mobile home park, some of the things that we're doing in our office, not only to analyze them, but to negotiate them, to finance them, and also manage, stabilize them, and also position them for resale, which we're in the process now of listed our first park, which is over double what we have invested in it in a little over a year and a half, a little under a year and a half actually. So there's a lot of opportunity here. I hope this video is helpful for you. If you like the content, hit that subscribe button, hit that like button. Be sure to follow up and on our future videos. But hit me up, post in the comments. Let me know if I can do anything to help you. We monitor the comments daily. Be glad to help you as best I can. And so thanks for watching Real Estate Fundamentals. And y'all guys take care and happy profitable investing.